August as food prices rose more slowly than in July. This is ahead of the South African Reserve Bank's interest rate meeting set for this Thursday. Stats SA reports that annual consumer price inflation eased to 3.3%. That's down from 3.5% in July, while month-on-month prices fell 0.1%, the first drop since October 2024. Food inflation moderated to 5.2%, helped by stronger cereal, fruit, nut, and vegetable harvests, although meat prices remained elevated. And economists say the slowdown makes it likely that interest rates will remain on hold, though base effects could push inflation higher in the coming months.
August inflation slowed to 3.3% from 3.5% in July. Now, this went against expectations for a slight rise and is what we would describe as quite a significant downside surprise to inflation. That's very good news for the consumer because lower inflation means more disposable income and therefore consumers are able to spend more. What it also means is that if you look at the details as to why there was a downside surprise, fortunately for consumers, food inflation now looks like it peaked in the July print, whereas we had expected the peak in food inflation to be in the August print. So that explains why we were surprised to the downside. What this also means for consumers is that low inflation, especially with the South Africa Reserve Bank now preferring an inflation target of 3%, it means that the South Africa Reserve Bank is unlikely to do anything with interest rates. And if there is a risk, the risk is far more for another interest rate cut sooner rather than later, and certainly not an interest rate hike. Markets are very focused on tonight's FOMC, so the Federal Reserve of the United States, and the potential interest rate cut that everyone's expecting. And then tomorrow, the South Africa Reserve Bank will make their own interest rate decision. We're expecting them to sound tolerant of inflation, but not to cut rates just yet. This 3% preferred target is a new target at the South Africa Reserve Bank, and they have to be sure that by keeping rates where they are currently, that they will achieve this relatively soon.